Hello and welcome to the Wendell Effect. My name is Brandon Wendell, and I'll be going over the sector rotation in the U.S. equity markets and taking a look at some individual equities as well. Before we get started, just a reminder, we are not broker-dealers or investment advisors. We're going to look at this information from an educational standpoint only, not telling you to buy, sell, or hold any particular securities or give any personalized recommendations. All markets do involve risk of loss, so it's a situation. No matter what we do, we can try to minimize the risk, but we can never eliminate it. And we are not subject to trading restrictions, so we have a position in a security to initiate one at a time. Please stay in touch with me. You can email me at brandonwendell.cmt@gmail.com. You can also reach me on Twitter at TraderBDub. And if you could please help me out, you can go ahead and hit like and subscribe when you on the video, and that way follow us as well and maybe get some notifications. It really does help us out quite a bit to be able to provide you with these videos on a regular basis. So without further ado, let's take a look at what's going on in the not the equity index futures, but I'm going to go over one moment. And there we are, the right one. Now it's the stock market analysis for the week of July 16th, sector performance, some of the ETFs, and some hot stocks to follow as well. So last month, pretty bullish. We're seeing a lot of gains in discretionary as well as technology. And, well, I guess it was a little bit off. But for the most part, up across the board, everything's bullish in the last month and even the last week. Let's see what we got here. Still showing lots of strength. So we'll have to see if this rally can continue. It doesn't seem like it should, but it just keeps going. So you can't argue with the market. The market's right. Anyway, looking at the XLY. By the way, if you want to know what's going on in the broad markets, watch my other video on the U.S. equity indexes. I go into depth there about the NASDAQ, the S&P, Dow, and the Russell for you. Anyway, looking at the XLY, consumer discretionary, we have a negative divergence, which could lead to a small pullback. We're pretty much at our targets. We've been pausing at most of these Fibonacci extensions. So it's pretty common to see when you got this divergence, a bit of a pullback before we can move higher this week. The communications sector, XLC, doesn't have the divergence. So it looks like it still wants to go up a little bit more. You see we've got a higher high in momentum and in price. We did sell off a little bit on Friday, but that's to be expected with a big gap up after we've been running. It's called an exhaustion gap. So we're likely to continue to push up towards that 69.11 target before we get a meaningful retracement this week. XLK Technology is also hitting a target here. The 2.618 extension didn't hit the extension on the last rally up here, but you do see a bearish candle now. And we did get higher highs on the indicator, so we could go a bit higher, but this is looking like with price action that we're a little bit weak, and we might go a bit sideways to start off the week. So watch out for a small pullback or sideways movement and then gaining strength towards the end of the week. Looking at the building materials, we should be in for a correction. We have a pretty good sized divergence here, lower highs on the momentum with higher highs in price. So I'm expecting a pullback, but not much more than to this 38.2%, $80.82. XLE Energy bounced off a supply zone. We've been watching that for a while, looking at the different levels, and we basically projected this one in the past. It went right up to it, went in supply, and pulled back. Now, we're above 60 as we hit that supply. That means we will not likely go below this low, which is about 78.50, before we get a pullback. So expect some sort of a rally, maybe right around 80 to get down that low. We might start off with a little bit of bullishness before we can go lower. And of course, watch to see if we do make another rally. If we make that rally and the RSI cannot get above 60, then we're likely to collapse. If it doesn't, if it goes above 60 as a rally happens, we should shoot up towards 86.98 by the end of the week. Looking at consumer staples, this has just been going a bit choppy and sideways. We are actually at a point that we may see a turn to the downside. Consumer staples are in vogue, or really the people buy them when the markets are in a bit of turmoil or in decline. And we're not like that right now. We're getting bullish activity. So this is not a favorable sector to be playing on the long side. It may drop a little bit this week. I don't see a whole lot out of it, though. In XLV Healthcare, this is just a mess as well. We did get a breakdown, but we couldn't hold it. We started to come back up. It does look like this is ready to go a bit sideways and down, perhaps to the 130 by the end of the week, but also not a huge move either. Moving on to financials, they actually started climbing out of the basement. We had that big news several months ago, and since then we've been slowly getting higher, and the momentum is there. So even though we got a red candle on Friday after that big gap up, we might try to fill this gap just above, about 34.13, 34.12, and then we'll rally try to get a bit higher by the end of the week, it looks like. Looking at real estate, our last sector, we ended up the week at supply, but again, we got plenty of momentum. So this is going to be a small pause. We may not even go down much before we rally up. I could see us getting into 39.65 easy by the end of the week. So a few trade ideas that we had that we were following. So we're going to follow up on these first. Previously on DXCM 4-hour chart, we were waiting for a pullback for our demand to be able to get long. It did. It worked. You can see we pulled back, let you in for the demand. The RSI was above 40, so by all means, we were supposed to go long there and started rallying up. So obviously, we're already at target 1, should have hopefully taken some profits, and making sure your stop is trailing however you need to. We lost a lot of momentum, so we may not make it to target 2. We may stall out without making a new high. Just keep an eye out on that one. But it was successful. Oh, actually, I take that back. This was well, anyway, you can see it actually followed through and did hit target 2 first, did pull back as I said it would. Sorry, I was looking at the wrong date here, but it actually did pull back and went to target 2. So this was a very successful trade, and hopefully we'll get to see more of these coming up very soon. EPL was another one that we were watching, and you can see that on the 4-hour time frame, it had hit our supply zone multiple times, and actually this is the current picture on this one. We've been hitting it multiple times, but there's still weakness. We can't get above 60 in the RSI, so we don't go deep into that supply. Hopefully this breaks down at this point, but it should have been stopped out most likely. We made it halfway, and usually once I get halfway to a target, I start moving the stops down to protect my profits at that point. If you're not in this, it is a bit risky to try to take an entry here, even though we're still near the supply zone. The more times you test supply, the weaker it becomes. But because we've been making lower lows, this still could drop. So keep an eye out. If we could break the low of this doji candle that we made on Friday in the afternoon, we might have an opportunity to go short. Maybe use one ATR, one average true range on the 4-hour chart as your stop loss above. So let me just see if I go to PPL. I'm in the wrong spot here. So we'll go here, PPL. And again, it was on the 4-hour time frame. That's what we're looking at. If I go to the average true range, we're looking at about 25.68. We'll round it up to 26 cents. So if you were to go short, as I said, it's a little bit risky, but what you could do is enter on a breakdown of 26.67, placing the stop loss at this point, again, above by about 26 cents. So what are we looking at there? I guess I could do the math in my head, but I'm going to cheat. 26.67 plus, so we're looking at about 26.93, which is almost where I put it. Pretty good right there. So anyway, we could possibly look at that. If we break down below that level, place the stop above, and use the same targets that we had once before, which are 24.90 and 23.68. Akamai on the 4-hour chart, also we're looking for an opportunity to get in on a pullback. I don't think it's ever happened, though. Oh, I'm sorry, this one did. Going back, this is June it was showing here. I didn't realize it was June, not July. So this one did come down and let us in. It has hit target number 1. And is stalling just a little bit. We got plenty of momentum, so it should run up to target 2. It might actually use this little area as a little bit of a bounce point, maybe another entry, if you will. So if we take a look again at the charts, Akamai, on the 4-hour time frame here, we go ahead and place the, it's kind of a wide area. I would just use the doji candle, really, and look for a bounce between 90.74 and 91.27, targeting that 95.57 on the way up. So stop loss, could use the average true range, which is 95 cents below the entry. It says a stop loss, and again, calculator out here, we're looking at entry around 91.27 minus the average true range of 95 cents is 90.32 for the stop here. If you need another entry. But in this case, because we've been up, it's not that big of a move. I would look for some confirmation, not just set a limit order there, but maybe watch as it turns around and catches it leaves the zone. Again, targeting 95.57. So follow up now again on Abercrombie & Fitch, ANF. We're waiting for that pullback to demand. Let's see what happened. It actually rallied up into supply without coming back. It is starting to fall back now, but once you hit supply, usually no good. I'm not going to follow up on that. I'm not going to take the trade anymore. Discover Financial, DFS, was also one we were looking for a pullback to 109.79, and unfortunately it too never happened. So Things happen. Sometimes we get them, sometimes we don't. So we're done with that one as well. Some new trade ideas for the week. Let's take a look at something that might come up. Airbnb. We're looking at a 4-hour time frame, possibly an 889 opportunity. Hoping prices pull back to this little demand at 131.70 to 128.77. Stop loss goes below. If we hit the moving average inside of that, it's perfect. You want the bounce from demand and the moving average at the same time. It gives you that good move up. So hopefully we get that here. Target 1 is 148.26. Target 2 is 155.19. APA, Apache, waiting for a pullback again to an area of demand here, 34.72, 35.43 with a stop just below, targeting 39.80 and 40.80. Carrier Global, CARR on the 4-hour chart. Got to be careful with this one. We do have earnings coming up on the 27th, so need to be out or tight stops by that time. You can always have gaps, so you got to watch out for that when it comes to earnings. But if we get a pullback in the meantime, our demand zone here, and again, the moving average should also be hit, 49.25, 49.86. Target 1 is 53.56, and target 2 is 55.84. We might have some upward movement first to get to the fib projection that we had for a move off the lows before we pull back. So that's why my upside target right now, 54.33, is for our current move, and we're starting to stall in that area, already seeing a loss of momentum. So waiting for the entry down here. Stop would just be your discretion below that level and targeting those purple lines. Anyway, that's what I got for you this week. If you got any questions, please send me an email, brandonwendell.cmt@gmail.com. Give me any feedback you might have. You can also find me on Twitter @TraderBdub. I'm there regularly. And of course, please hit the like and subscribe buttons for us, as well as the alerts if you want to be notified when we have new videos coming out on a regular basis. I appreciate all your support, and thank you for watching. Trade safe, trade well, take care.